Thursday, 17th of May 2018. My name is Alex Piroglu and I'm the chairman of the UK chapter of the CMT Association, and I'm here joined today by Fred Meissner.
Nice to be here, nice to be here.
Fred, thank you for coming all the way to the UK. Fred will be presenting to our chapter smart data versus cap-weighted ETF study. We are anxiously waiting for his presentation. This is a very unique topic. But before we proceed with the presentation itself, which we'll be having in a few minutes' time from now, we'll be having a short interview to get to know the person behind the presentation. So my first question is, Fred, could you please give us some information first about your educational and your personal background before getting involved with technical analysis?
Sure. I went to school in Texas as an undergraduate at Trinity University in San Antonio, and then took my graduate degree at UCLA in Southern California, International Business and Latin American Studies. And while I was doing that, I was expecting to be a history professor, but I went to work with a brokerage firm part-time, and two of the successful people there were practicing technical analysis, and that's how I got started. I started working with them.
So how did you actually get involved with technical analysis? Did you learn the craft on your own, or was it someone else that helped you with it? How did you get involved?
It was a little bit more on my own. Like many technicians, my first set of investments were done on fundamental analysis and were not successful. And I realized there had to be a better way, and that's when I met my two friends, Sid Moses and Harvey Baraban, at Baraban Securities, who used technicals. And I got real interested in it and started studying it, and by the time I got out of graduate school, I decided to make it my life's work.
Your life's work, and where did that lead you to afterwards? I mean, professionally?
Well, I started out as a financial advisor at Dean Witter, which is now part of Morgan Stanley, realized that the research process was much more interesting to me than the brokerage and sales process. So I moved over to a firm called Robinson Humphrey in Atlanta, Georgia, and I became their technical analyst under the chief market strategist, Bob Robbins. I worked there for 10 years, from 89 to 99, and retired in mid-June because I didn't want to go through what I thought was going to be a big bear market. So I took some time off, first time in 10 years, first vacation even, and saw my mother and did some things for 2-3 years, and then went back to work with a little cycles firm called the Notley Information Service with my friend Jonathan Arter, who still works that firm, and then went to Merrill Lynch in 2004, stayed at Merrill Lynch until 2009, and then started the Fred Report, which is where I'm currently working. That's my own company, my own research.
So your own research in your own company, can you please give us a description of your day-to-day responsibilities and what is the most challenging aspect of your work? Sure.
Well, what plays a part in, I think, every career, and one of the lucky breaks that I had was I decided to work early on with exchange-traded funds, or ETFs, back in 2009. The reason for that was research analysts at firms like Merrill Lynch were not allowed to discuss individual ETFs, so I started working with ETFs as if they were indexes, and that's turned me into one of the first ETF strategists in the United States. So we have portfolios of 6-year track records. My day-to-day responsibilities are working with my clientele, who are mostly financial advisors at brokerage firms with some institutions, reading and writing reports, and a lot of work on the phone and consulting, and design and implementation of exchange-traded fund portfolios, basically.
And when you get on the phone, for example, with financial advisors, how well-educated do you find they are in technical analysis?
It's a small subset of financial advisors that are very interested, and I have a lot of them as clients. The average financial advisor doesn't really use technical analysis, but I would say a quarter of the older financial advisors realize the value in technical analysis, and I have, as I say, many of them as clients. Most of my clientele, very large producing advisors, large amounts of assets. I believe my average advisor size is $500 million to $1 billion in assets, and they've been in the business for 20 years or more.
Okay, so quite experienced. So let's talk about your techniques, your technical toolbox. What are your favorite tools and techniques? What do you specialize in?
Well, I am more of a juncture recognition service. In other words, I try to find turning points in the market and see how those translate into trends. So I tend to use the stochastic oscillator as a way to identify a turning point in conjunction with some tools I developed myself. And then I use a moving average system, which consists of the 5-period and 20-period moving average, to determine if the trend is in effect and if it's up or down.
Got it. And how do you sequence these tools that you mentioned into a methodology or structured way of looking at the market?
Well, I always describe it as if I were a surfer. When I lived in California and went to UCLA, I was the most erudite surfer dude in Manhattan Beach, California. And essentially, if you are surfing, your goal as a surfer is to find the right wave in a set of waves and then ride that wave. So I will use a stochastic oscillator first to determine that I'm on the right wave, and then the duration of the wave comes from moving averages.
Okay. If I asked you to recommend 3 technical analysis books, which one would this be?
I have 3 that I absolutely love that I recommend to my advisors constantly. The first one is John Murphy's book, Technical Analysis of the Financial Markets. That is the best comprehensive book on technical analysis and the easiest one to read. It also has a set of test questions by chapter so you can test how you're doing. So that would be number 1. Number 2 is an odd book that you have to order on Amazon or find used. It's called Stock Market Logic by Norman Fosback. And the reason I like that book is every chapter essentially is a different technical indicator. So it's easy to read. I don't agree with all of Fosback's interpretations of the indicators, but I love his discussion of the indicators and listing of the indicators. And the last one is probably Larry Williams. He's a dear friend of mine. Larry Williams' book, How I Made $1 Million Trading Commodities Last Year. Larry's got an excellent grasp of market psychology, and I love all of his work because he actually trades.
Yeah, he's really distinguished. I'm a big fan of his work, and I follow it very very closely. And really huge fan of Larry Williams' work. Larry's in DeMark's as well.
Tom DeMark's work is really interesting work for me, but it's very difficult to use managing portfolios because the signals are very rigid. And because of that, you don't get a signal on everything in the portfolio. So I love Tom DeMark's work, and I love Tom tremendously. He's a Wisconsin boy, what we in the States call a hoser, which is basically a beer-drinking good old boy that just happens to do really good technical analysis. Infectious enthusiasm and a great guy.
Right. So, which brings me to the next question: technical analysis principles. If you could distill your knowledge in 3 axioms, for example, to fight the trend or whatever, which would these actions be?
I think the first one obviously is you want to trade in the direction of the trend. So the trend is your friend. That's the first one. The second one is basically use your head. If something's gone up a certain amount, the next signal may not be as strong a signal, even if it looks like the first signal does. So I always try to check my work and be cautious. And probably the last axiom is risk management. Use a stop loss, use some sort of way to get you out of the market if you're wrong, and obey that resolutely. John Templeton, who I was fortunate enough to meet, and in the Southeast, Lauren Templeton actually founded the Southeastern Hedge Fund Society. I was one of the charter members. But Templeton said the very best securities analysts on Wall Street are right 70 to 73% of the time. What that means to me is 1 out of 4 things that I do has a chance of being wrong or more. So you have to protect your customers if you make a mistake.
And if you could call 25-year-old Fred, what would you say to him?
I would honestly, I'll give you the real answer. I would tell 25-year-old Fred to spend a lot more time learning math. I'm a terrible mathematician. I'm a real great inductive reasoner, but I do the tip by counting on my fingers, and sometimes I get that wrong. So I have a guy that I work with who's got a PhD in math and engineering, but I often wish that I could do more math so that I understood better what it was he did.
Fun fact, what does Fred do outside of market hours, and do you have any hobbies?
You know, my girlfriend is a professional dog walker of all things, and before you laugh at that, realize that a dog walker in the United States gets about 30 pounds an hour, okay? I love dogs. I play with our dog, I help her walk dogs, and we sometimes have a bunch of dogs over to the house. That and reading are my 2 favorite things.
Got it, all right. And I think that probably wraps up our interview for today. Fred, thank you so much.
Thank you, and we're looking forward to giving your presentation.
Yeah, me too. I'm looking forward, and the shoot's going to be very interesting.
And by the way, there's a lot of math in there that I'm not completely clear about because Lou did some of the work. So if I say something like, what the hell does that mean? That means that I need Alex to help me with the math.
No problem. We will keep it between us.
Got it, okay.
All right, okay. Thank you very much for the interview. This is Alex Pure from London. Have a nice day.
Thank you.